Everybody, good morning. How's it going? How's it going? How's it going? Everybody have a very Merry Christmas. Have a very Merry Christmas. And for those celebrating Hanukkah, how was Hanukkah? First night, anyway. You got 8 crazy nights, as Adam Sandler says. Anyway, welcome to the show, Don, Donald, Rex, Sergio, Diane, Dan, Larry, Ivan, Arturo, Mary, Craig, David, Svenborn, Rungamer, Gary, Merle, Laura, and Mark. Welcome, everybody. Looks like we got a little bit of light crowd. We had a light crowd on Tuesday. And howdy from Texas. Howdy from everywhere, right? We're global, baby, all over the world. And one of my trading mentors that I hadn't heard from in a long time called me yesterday, and he was like, "Man, I've been keeping track of you just a little bit, watching you on YouTube and stuff, and really proud of you." And it meant a lot to me. He really cool, really cool. He was like, "You're just taking it nice and slow and easy, helping as many people as you can, doing it the right way." He's like, "You could do what all those other YouTubers do and just make videos that would attract thousands of views, and just not really give people valuable information, but make it a big show." He's like, "But you get out there and you actually try to make a difference in people's lives that follow you." It's at least that's summarizing what he said. It just it's powerful, it's humbling. And I thank all of y'all for coming. Hopefully you have that same kind of experience. Hopefully that's why you subscribe and be channel members and follow me. Hopefully hopefully I help make a difference at the end of the day. That's the whole goal. Like, for me to do this, I just want to help people make a little scratch, cut a little time out of the grind. Learning to trade's a grind. That mentor was the one that said there's no substitution for seat time, and there really isn't. At least it wasn't for me. Now I'm trying to cut out some of the grind, but there's some stuff you just have to learn. Just have to learn the hard way, and unfortunately, some of us have to learn it several times. So, anyway, Tuesday was a nice, big, fat up day. I don't know if we were just on Christmas cheer. We're getting a little bit of a pullback this morning. Kind of go through it here in a few minutes. But let's start here. I had this right here I brought in today. So we've got the big bar underneath my face there is Info Technology. I mean, I could jump to the other side, I guess, so you can see that side. Info Technology. And this is earnings growth right here for, I guess, fiscal year 2025. Maybe it's calendar year 2025. I don't know. It's kind of what we're expecting to happen here. And maybe that was supposed to be calendar year 2024. I don't know on this chart, because how do you have future earnings growth for a year that's in the future? So I didn't make the chart. I just found the chart, and it's very interesting to me. I mean, we had Info Technology definitely outperforming. Healthcare definitely was performing, although it's starting to wane, right? Like, this is earnings growth, not stock chart growth. So these things that were better than the S&P, I think this is 24, not 25. We had tech up, healthcare up, industrials up, materials up, and communications. Now, things that were not outperforming the average of the S&P: consumer discretionaries, financials, utilities, consumer staples, real estate, and the laggard down at the very end, energy. Why do I bring this up? It's Goose and I found that the ones that hang out down here tend to not be down here multiple years. Now, we saw utilities was pretty much the bottom last year, and it's not the bottom this year, but it's not the top either. So this is why you have to be careful here. These are not going to just suddenly become the top, typically. Now, one of these could be, but there's opportunity here for them to not perform as poorly as they did last year. Now, utilities is still underperforming. It was up more than it had been, still underperforming. Financials, still kind of down here in the bottom. And so this kind of gives you an idea. This is kind of a sector analysis. I look at what was performing, what was underperforming. You can look at stock price performance, but you also can look at earnings performance. So I know there's been a couple questions, little bit of conversation in the Termite Trading Lab group back and forth about how to do sector analysis. These are some of the things I like to look at, and I'm not opposed to just letting other people make cool graphs like this and me be able to grab an idea or two right off of them pretty quickly. I don't need to dig through all the companies that go down in here. Now it gives me an idea like, well, maybe there's going to be some energy opportunities coming up in 2025. The trading year that is 2025. We're just a week away now. Next Thursday will be the first trading day of 2025. So, like I said, this is opportunity, right? This is where you search for opportunity. This is where you also, you're like, well, the ones that were on top, specifically healthcare here, probably not going to perform as well in 2025. It doesn't mean it can't. I mean, it can still stay up here, but healthcare may fade a little bit. We don't typically get the same ones on the top and the same ones on the bottom. It's not typically the way it goes. That doesn't mean technology can't stay up there for 10 years at the top. It's just not typically the way it goes. You know, energy could stay at the bottom for 10 years. Just not typically the way it goes. And there's the average. You know, you look at the S&P average right there in the middle. So there's the outperformers, there's the underperformers, and they're likely to change positions in 2025. Everybody kind of clear on the concept? Now, I also brought this chart. Thought we had inflation under control. Right? Look at that. Look at that. Eggs back at that not just back at the highs, but back to an all-time high. That's the Midwest. Large eggs, dollars per dozen. Look at that. I'm telling you, got to watch out for this inflation thing. It's going to come back and bite. Got that preliminary all clear. No big deal. Whacked it. Under control. Let's cut some rates. And then rears its head right back up. Cautionary thing right here. Is it bird flu? I don't know. You can say it is. I mean, the financial media says it is. And then we're getting right past holiday baking demand. So is this going to stick? It's one to keep an eye on, though. I keep an eye on it because, well, that's an direct inflation measure, right? Direct inflation measure. Food prices. Eggs going in a lot of stuff. A lot of stuff. All right. Popping back over here before we talk any kind of trades. All trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. That means I predict stuff, right? I make epic predictions. It says so on the top of the channel. Right in the home, you know, if you go to the channel homepage, it says I make epic predictions. And sometimes they come true. Crazy, right? Sometimes they don't. Not always right. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling anything, unlike some other financial entertainers. I'm not telling you to buy, or sell. I'm just telling you to be careful with your money. All right? Be careful. Don't trade stocks, don't trade options, don't trade bonds, don't trade Forex, don't trade futures, don't trade cryptos, don't trade treasuries. You can there's a substantial risk of loss if you do trading. All right, you can do investing, and there's still a substantial risk of loss. And if you desire personal financial advice, hire and consult a financial advisor. That's what they're here for. Hey, Cam, good to see you, my man. And be careful out there. You can lose money trading. That's that's the bottom line. That whole thing. So here we are. Still got half the world on holiday. Right here. All sorts of bank holidays all over the place. We'll get a little bit of economic news. I mean, we got some, should have the unemployment claims. Obviously, this isn't populating that number from 8:30. Maybe maybe the guy that's supposed to push the button hung over on Christmas cheer. I don't know. Maybe still celebrating Hanukkah. And we'll get a few numbers today. Not really much of anything. Still mostly a bank holiday, even in Japan. Today, or tomorrow, Friday, we'll get some ISM manufacturing. It's just not going to be much of anything. Just a light, blasé, still no volume day is what I expect today. And we can push higher like we did on Tuesday on the Christmas cheer, but I would be careful. I told you we were going to grind higher likely in a low volume, lack of news environment. That seems to be what we're doing so far. Got a little bit of pullback this morning. Jumping down to the time frames and looking at it. We restarted yesterday at 6 p.m. If you didn't know, the market opened back up 6 p.m. last night. Drifted higher just a little bit into the wee hours, and then started giving it back about 3 in the morning. And we're just sitting here right here above the 15-minute roadmap line on ES. Now, back a couple days ago, getting in the cobwebs already, we were doing this right here, retesting the 15-minute roadmap line, and I was like, well, that looks pretty good to pushing higher. And that's what we did on Tuesday. Pushed right up in there. Pretty nice. Pretty nice. Now, looking at the high to low right there, we hit the 1618. Why did we stop right there? Look at that. Look at that. You think this is magic. I tell you what. Not magic, just fib lines. Now we're right back in this zone. Retest the breakouts. From that high, right back there. Last Friday. Holy moly, we're getting into a week ago. And if we hold that, going higher is the operative right here. Grind it higher. All-time high, just right up there. Not far away. If we can hold this, just delete a few things here. Delete a few things. So we got up above the 618. I said that was big resistance to get above. We got there. We're kind of back testing it today. That's where we rejected a week ago. Now we're right here. We hold this. Going on out. Next upside targets. Right up here. Right around 6,200 on the futures, which is lagging a little bit on the S&P. We don't have that price because that's the close price. In about 20 seconds, we're going to get the open. This will drop down roughly 20 points probably. So we'll probably see this about 60-20 roughly. We've got about a 55-point discrepancy between them right now. There it goes. There it goes. Look at that, 60-20. Boom. So we're going to see that potentially rally up here if we can get the continuation. Yeah, stuff on the list, hitting alerts. See what we got here in a minute. That's kind of the general what I expect. If we don't hold this right here, this is very important. If we don't hold this, we're going to come back, potentially retest the bottom. And if we don't hold the bottom, that opens up the door for the bigger daily retrace. And it looks pretty wicked. All right. Even though the roadmap line is coming up pretty viciously, we could come all the way back down here to 5,700. Right in here. Now we are above that 618. We're kind of pushing, we pushed up to the 76. That is still in the realm of where we could turn down from right there. Be careful. That's why this is important right here. Could result in that right there. But if we can break out above the high from Tuesday, go cruising on up, and then we start the whole thing again. Like maybe we go for a bigger correction. All right. That's kind of the very simplistic way to look at it. NASDAQ looked pretty darn spicy here. Like we set this baby up to crank higher. That right there was a pretty nice high. Then we did this big retrace back in August. In case you missed it, in case you haven't been watching, in case you're new here, in case, let's catch up on the conversation here. We made a big high. We made a big retrace. Moved up, bounced right off the roadmap line. Exactly like I thought. Set the target right up here. These two numbers. And after we did that, boom, right up in there. Now, we kind of went a little bit extra spicy on that upper target. Ran out of juice, and in one big FOMC day, plus a little bit extra gravy afterward, we came all the way back down and retested that high right there. Right there. Beautiful. Next expectation on this pattern. Very classic price action. We see that run up, run out of steam, retrace the breakout, retest it, hold. Nice big hammer candle type thing. Indicates next one up right there. Right there. And it just happens to be where the 1618 of this little baby retrace comes in. That's what we call a confluence of different fib lines. And it makes it higher probability. I was pretty hyped up on Tuesday. I actually added some position with some leverage, hoping to catch the move higher. What kind of leverage? This baby. One of my favorite ways to add leverage for QQQ. This is an ultra 3x leverage right here. It's just based on a daily percent wise, but this could pop on up here. You can see my alerts in here. Just looking for a little nice little pop. Log mode, that puts us at the 1272, right around 98. That'd be pretty good, pretty good. Now, you may be like, leverage, I'm not so sure. Not so sure. Well, here's the other way. You could look at it with QQQ. We didn't get that big tail overnight. Right there, showing up. Because, well, QQQ, I don't typically use overnight action. This is a derivative. This is an ETF derivative of NASDAQ. Just like TQQQ is an ETF derivative of this. So it gets really complicated or convoluted by the time you get to the ultra leverage thing. But this one right here, looking for that pop. Now, the real reason I got really interested in it and actually put on a position was this chart right here. On Tuesday. What was a Friday in my mind? This is a 1 hour chart, right? We got that close above that 618 from that high to that low. This is the roadmap line pattern on a 1 hour chart. Echo Trades, which is not currently available for sale, keeps track of these things. And when it fires off, it sets up a high probability trade based on the 1 hour chart. How high probability? Well, we can turn on the algorithm and look right there. 80 closed trades, 72% of the time, 1.3. It's not the most bangingest, right? Not the most bangingest, but go look at this one. 84% of the time. Now the profit factor, definitely a little, like you got to be careful. Control your risk. Profit factor a little closer to 1. That means the losses eat up the gains. That's 78 trades right there on TQQQ. Possibly go hit that target. Took a big chunk of loss right there. That's what ate up the profit in the history. Cool, right? That's how I do it. Stock and watch. NQ was one of those I'd been watching for weeks. Really? I mean, we rode the NQ, we rode the TQQQ trade from here to right there. Then I was like, now I need another setup. That 1 hour chart gave me the setup to possibly get the extension. You know, a lot of people are like, just want trades. I just want awesome trades all the time. Let's face it, awesome trades are not present in the market all the time. Awesome setups are, but the real money-making opportunities, you've got to hunt down and stock just like you would if you were hunting an animal in the woods, right? I caught this one. It took longer than I expected it to, so I didn't quite get the performance that I wanted. Took twice as long as the average. Now I'm hoping that this one goes a little faster, gets me a little more juice, and has less theta decay involved in it. Pretty spicy, all right? Everybody clear? Everybody finding some value in this? Let me know in the chat if you're finding value in this conversation. I don't just go chasing all the trades that set up. A lot of them I'm sitting here watching, waiting. Like I waited for NQ to set this baby up. It did the classic thing right here. Very classic that we get an extension up here, run out of juice, retest the breakouts, and set up the extension. Why would I be willing to go into TQQQ? Because this, the most underlying of underlying for this setup, did one of the classic price patterns and held everything. Now, how do I know I'm wrong? It comes right back down here, breaks that, and it's all over but the crying. All right. The chat is silent, so hopefully you understand the whole setup there. Russell, this one, not looking so hot. Failure to do much of anything except ride that roadmap line here this week. After that flush right down there, we kind of knew it was coming. Got down here, I said, you know, if this thing breaks down right here, I'm getting short. Looking for that roadmap line test, and FOMC, we went right down to it. Closed out my position, and I'm just waiting. Right up here is resistance. Right down here is support. There's no high probability anything at the moment. No high probability setup, so I'm just waiting for my opportunity again. We break above this area right here. High probability for this. Break, bounce down off of this. High probability for down here. That's kind of what I'm really waiting for this. And if we don't do that anytime in the near future, or if we set up something else that makes me question this, I'll adjust. Stay flexible. Stay frosty. All right. That right there, CL, just kind of grinding. Hurazing, it's not a request show. Sorry to break it to you. We do that on Tuesdays, and this week was Christmas Eve, so I didn't do that. Probably going to keep hanging out right in the zone, chopping and grinding. We're going to break out on oil up above here. If we're going to break down, we're going to break down below this uptrend of lows and go ripping down or breaking out. You know, we could get a little spike out and then just reject it back. Not really expecting much out of oil right now. Gold, very, very cautious here. That level right there, I need that to be above that, and then above this to be bullish on gold. Otherwise, this has the perfect setup, if you will, for doing this right here. I'm not trading for that. I'm just waiting to reload more position down here. Has the perfect setup for it, but it's still not certain. We could stop here. I mean, where do you stop? We got this support, and this support. Silver, on the other hand, this hit the ideal. I reloaded right there. Couple of updates. Looking for this to get continuation, break back on higher than the 618, which is not drawn properly on here. We have the big correction, 618, right there. And we have the smaller correction from right there down to here, right there. If we're going to get continuation lower, we may turn down right there and get the final push down. So this is while this hit the ideal, the minimum ideal spot to reverse higher, and I went in with 2027. Like, holy cow, that's a long time from now. Yeah, 2027 is how far out I bought. I don't expect a lot of time decay on that, even if we go right back down here off of this resistance. Breaking higher. Yeah, put us right up in there. That's above this 618 and sets up the likelihood we're going on even higher. And that can go in a big way, in a fast way. And that's why I'm buying so much time. I don't want to get caught with this thing kind of expiring on me and then blasting off to the target. Target's up here, 55, 60 area. I'm in like 30 strike calls out to 2027 on SLV. Went with the ETF. So 30 strike calls are a little bit out of money, up here, a little bit out of the money. What does that look like on here as far as targets go? Looks like still up here around 54, 50, 54, 55, 56, possibly even 59. Like, holy cow, that's like doubling the price. Yeah, that's why right there. Sat and waited for this trade for a long time. Waited. Now I just have the first little position on. I'll look to add more. If you want to know all the twists and turns on that one, join Termmeyer Trading Lab. All right. Not saying you have to. It's for those that want that kind of information. Bitcoin has done something that I have to tell you. I pulled this up last night. I was mad. I was like, son of a crap. I made the wrong decision. I was like, this is going to blast right up through Christmas cheer. We're going to go right on up through the resistance. I was like, well, I'll just see what it is in the morning. Popped it up this morning. I was like, uh-oh. We didn't even hit the resistance. Uh-oh. You're counting on Bitcoin reversing higher here. Be very, very, very careful. Look at that. 3-wave retrace. Draw it in big blue arrow so you can see it. That move. That move. That move. That move right there. First move. Second move. Third move. And it stopped where everything was very proportional. Rejecting. Big red caution flag. Where's the target here? If we break below these lows, and these lows go all the way back over here, right there. I got off my leverage right over here. I was concerned about it last night when I was like, oh crap, man, Bitcoin's gonna break out and run again. And this morning I'm like, all right, there's a reason. Watch for this retrace. If you're in any kind of leveraged Bitcoin position, be very, very careful unless you're just willing to ride it down and back up. Why is this level important? Zoom her out. Look at recent events. That zone right there. Check it out. That's just above the breakout level. Circle back to NQ, right? We got to a resistance and retracing back to the breakout level. Very, very likely. Got to zoom it out even more to kind of see why that was the target zone. Right there. See that 1272? Just like on NQ. These things aren't magic. It's all just math and fibs and stuff like that. You do it right. You know, there's a lot of people out there that just try to draw some fibs on a chart. They're like, this crap doesn't work. They aren't doing it right. I hate to break it to them. You can't just throw fibs on a chart and it works. There's some nuance. It took me a lot of years to figure it out. That's why I try to cut out some of the work for you on all the grind, like I was talking about in the beginning. Right there. Highly, highly likely where we're going to visit on Bitcoin. Right there. If we break down below these lows. Very, 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 very key right here. Retest this zone right around 74, 75, maybe up to 80. That's going to crush a lot of people, all right? Going to crush a lot of people. That's what we need to do, though. The average hodler of Bitcoin is up $67,000 per Bitcoin. Average. Holy moly. Can we shake out some weak hands going down $20,000? You betcha. Free up the market. And then the bigger rip. Just like NASDAQ. Potentially. NASDAQ can fail. So it's potential. It's always a potential. Doesn't have to do the highest probability thing. Ethereum. Looks like we're going to get another leg down, and then that makes 5, and then we may do a 3, and then something else corrective. This is a big question mark right now. I'm not sure this is on the same path as Bitcoin right now. But be very, very, very careful. Dollar, still grinding this target area. Grinding. I do expect this to get a bigger retrace and then potentially break on down. But unclear right now. We seem to be unfinished on the upside. So a little bit higher. Possibly up as high as 109 right now. Or we may top that out. NKD. Don't think that's open today since Japan has a banking holiday. But we got a candle. It's green. So we'll see. Maybe they have an early close or something like that. If we can break out, going higher. If we break down, probably taking the U.S. market with it. This is a kind of global liquidity thing. So if we break out above the top of this box that we've been consolidating in since the big August flush, we did the August flush and popped back up in this area and just kind of been grinding sideways here for months. Break out the top, things are going higher. Break down here. We've been holding these lows here. We've been holding since October. Each time we retested it. So if we break down below those lows, probably doing a bigger flush in the markets. U.S. market probably going down with it. Simple as that. Now I go pull everything moving $2 or more. I have a little tool I built that pulls up Market Chameleon, grabs everything moving $2 or more up, puts on the gainers list. $2 or more down, puts it in the decliners list. My bonus trades, not really anything set up that I find valuable this week. A low volume environment, probably not chasing any of those. So be careful out there. TM, and we'll wrap up today with my expectation of the day. So this is a cautionary chart here. Why? We did this move and very violently retraced off of it, back down to that. And we have this, remember that 3-wave correction conversation we were just talking about on Bitcoin? Look at this. 1, 2, 3. Puts it right to there. Just a little bit higher. $5 higher than where we are now. And we can take it back down to the bottom again. Honda and Nissan talking about merging, becoming the third biggest automaker in the whole land. Toyota still hanging out here. We'll see what happens. This could be corrective. We were looking really spicy over here, and very quickly we were retraced. Look at that whole big move up. We came down to a 618 retrace. That could be a measured bounce. Had my eye on this one for a little bit. If we do a bigger, possibly bullish thing, we could be looking at a move right up in here on Toyota. Is it ready today? Not for me. I want to see it above. I already had an alert there. I want to see it above this 209 area and stick. Trade for that 209 to 350 area. If you're a gambler, you could buy now. The best place to buy was back here when it looked the nastiest. Still, it was super uncertain too, though. All right, you gotta have conviction. If you're gonna buy back here, you gotta have conviction that this pattern is gonna hold or work, or it's such a small position that you're like, if it works, I'm gonna make out like a bandit. If it doesn't work, I'll be okay. And I know where I'm wrong, which is when it breaks below the 786 level. So would I buy right now? No. You're late for the aggressive buy and you're early for the conservative buy. That puts you in a higher risk position to lose your money. Cold. Now, a lot of people were wanting to know about this on Tuesday. It wasn't on the list, and I was just like, This was starting to drop out. A lot of people were like really excited that we're going to see natural gas boom. Natural gas is a fickle ticker, I guess you might say. Look at that. Look at where we got to. Anybody remember my target? And look at what we hit today. I'll be dang. I'll be dang. I get it right every now and then. Look at that, baby. I'll be dang. $4. That could be the top. That could be it. That could be it right there. That could be it. If Bitcoin's going down to that 17,000 area, Robert, it's going faster than February. And if it holds that 70, 75, $80,000 area, we'll probably rip it back higher very, very viciously. You can review the commentary I had on Tuesday, Monday and Tuesday. Why? So that might be done. All right. Would I trade natural gas now? No, it's probably sucking people in and then it's going to rip everybody. So gold might be a smart play. That could be it. That could be the bottom on gold. That's the ultra short. That's a leveraged short. Be careful. Lose money, but I think this might be done. I may actually buy some right there. It's not one of my price patterns, but I may buy it because of the NG price pattern right here. I think that might have been it. Could go as high as 420. But I think that may have been it. Other ways to play, Boyle. That's a declining asset chart. And UNG is also a declining asset chart. Just be careful. Be careful. And this was on the biggest decliners list. Or Boyle was. All right. CYD. Ooh. Don't trade that. Why? This choppy, nasty China stuff. Millennium Group, not for me. Worked out, but not for me. This is not a kind of, I'm a trend pullback continuation trader. I look for those trend pullback continuation trades. A lot of them are high probability. I catch them over and over and over and get it right a lot. This is not a trend. This right here. This is just choppy, sideways, nasty. No trend. Except a slight bias down, but no trend. We get these spikes occasionally. That was another one. Highly likely we're coming right back down over the coming weeks. Right back down in there. Add. I'm not sure what that ticker was supposed to be. That one. Dumpster fire. Reverse split. Not my kind of opportunity right there. Be careful. Reverse split after reverse split. And this thing is just likely to go to zero down here. Decliners. Well, MSTR. Watch out. Bitcoin flushes down there. Watch out. This is setting up a high probability setup. I call it the bubble pattern. Right there, we get super thrill and excitement. We get this complacency where we chop, start breaking down. Right now, we seem to be right in this area. A few people like, it's taking a little longer. Why is Bitcoin being down? Somebody needs to quit selling. I mean, I see this stuff on Twitter too. Like, people say this stuff on Twitter. If you follow the right kind of hashtags and stuff, this looks like we're going right back down here, which may retest this breakout. Could come all the way down to this 185, 200 area right there. Then we'll see if we can hold it. If we hold that, going higher again would be the most likely thing. So that's probably pulling down MSTX, MSTU, all those leverage ones. Be careful. You look at that MSTR pulling back that much. How much is that? Pulling back that much is like 35, 40%. So MSTX could pull back double that, maybe outperform even 80%. Ooh, that puts it down at like 15. Do you want to ride this from 70 down to 15? I bet the puts are crazy right now. Be careful. BitX. That was the leveraged Bitcoin play I eased up on. I was holding shares. Looks like we're coming back down to this 41 area. 41 to 45. That's what it looks like. I will look to reload down there. BTCL, leveraged Bitcoin, probably coming down to the roadmap line, which is non-existent because we don't have enough candles. BitU, same thing, somewhere down around 37. Oil, we already mentioned, is a declining asset. Be careful. What does that mean? It means the cost of maintaining the leveraged long in the futures for natural gas eats this alive. Eats the cost of the NAV, net asset value, eats that net asset value, causes decline over time. And if you stay long-term long in BOIL or UNG, you're probably going to lose your shirt, even if natural gas just stays flat. The other ones that are like that, UVXY, declining asset, and VXX, VXX, also a declining asset. There's several of them out in the market. The natural gas tickers and the VIX tickers, those typically have that backwardation, contango involved in it, and causes high trade maintenance costs for leverage, which causes them to go trend toward zero on these ETFs and ETNs. ARKB, that's a Bitcoin ETF, probably going to retrace a little deeper, maybe back down to the 76 area. FBTC, same situation, 70 or 66 area for this, slightly different prices. GBTC, same situation, probably down to the 60 area. SMLR, that is doing the MSTR writing bonds thing. Looks a lot like lot similar there, doing the same chop. We may see this violently retrace, maybe back down to this 40 area right there. CREV. Nice. Oh, there's a triple threat trade kicked off on QQQ. Nice pop, but that's a nasty looking chart. And I think Tuesday we had that pop right there, and I was like, this looks nasty and probably going to retrace, and it's already retracing, and watch for it to break back down. Has everything but a reverse split in here to make it a complete dumpster fire. DPST, keep an eye on this one. Here we are at the end of the year. New quarter starts next week. Financials tend to be the place where money flows first as we report earnings. This could break higher and set up a breakout even higher. I'm not sure on it. I'm probably not putting my money on that one. That is a 3x leverage right there. Be careful. FAS tends to be a more reliable one. It's already experienced a little bit of bounce action right here. This is probably already money flowing into financials ahead of Q1 earnings coming up here in a couple weeks. Q1 earnings kind of kicking off this week right here, the second week of January. Second full week. Now, doesn't have to continue from there. We just see this ramp into that, and then if it's good, typically we keep on higher. If it's kind of meh, it'll retrace. ETHT, ultra leveraged Ether ETF, and be careful. There's ETHU, which is one I hold shares of. I bought down here and bought down here. I bought it, well, let's see. I bought at 8 and I bought at 4 and I bought at 5, and I'm still sitting in a little bit of profit and cautious. Like I said, Ethereum kind of on a different path than Bitcoin. Holding some, but I'm just not sure. I'm ready to liquidate if this starts breaking down at all. What I'm watching for, break down below that high right there, and we're probably going to retrace it deeper. Probably going to retrace it deeper. Let's set that back. Wonder what color I had. Look at that color. All right. Bayos, no opportunity there. Reverse splits galore. Oh, nasty. Connell, back to the roadmap line. We can hold support here. We can launch off. Be careful. This may go a little deeper. May go a little deeper. Let's just clear these off really quickly. That low, that high, that little bit deeper would be right here for coin or for Connell. Leverage, 2x leverage on coin. Watching for that to flush on down in this area, hold, and then turn and burn. Coin looks like it's coming back to the roadmap line right there. So if coin comes back to here, Connell will probably come on down. Got a bunch of stuff pulling back today. FNGU still has the opportunity to go up to 911. MSTX, be careful. And I think I picked up the rest of those. SPXL. That was on the decliners list, starting to turn it around a little bit. We could see this break on higher, 198 right there. If we can push it on higher. IBIT is BlackRock's Bitcoin ETF. This can ride with Bitcoin down to the roadmap line right there very easily. And last but not least, LABU. Ooh, that got nasty. Watch out for this thing to flush on down. Do have a little bit of support right there. I wouldn't touch this. It's biotech and leverage and just danger. Biotech and leverage. There's biotech plus our old friend leverage right here. Got to be careful. That cuts both ways in a hurry. And that's the end of the list for today. Not a ton of stuff out there, so not a lot moving. I expect my expectation for the day is just kind of a slow grind higher again. We're already starting to kind of trying to ease up a little bit. Looks like we're just grinding. Touch that 15-minute. Beautiful. So watch for it to break above that. Take it back higher. We start breaking down below this. We may go back to the bottom. If it turns sour, keep an eye out. My expectation is for a grind higher, but if things start turning sour, breaking below this level right here, this is on ES, not on S&P. Why ES and not S&P? Because it's a whole different picture. Look at that. Whole different picture. This has been pretty bullish, whereas S&P has been unclear and just kind of choppy. The next resistance right up in here. This is another reason why we may see this turn around and push higher right there. All right. What I'm looking for today. Be safe out there. Have a great day. See ya. I'll be at Discord, hanging out, answering questions. And I'll be back. Same bad time, same bad channel. Tomorrow morning, 9:15. That's 9:15 Eastern. Set your calendar. And